Lea Coss with the Mortgage Center. I wanted to help you to understand how much money you actually make, because I can't tell you how many times, in fact, I'll throw a number out there, at least 70% of you, when I ask you how much you make, or you fill out a mortgage application, or you talk to the bank, or you talk to your friends, or anything like that, and they say, well, how much money do you make? What is the qualifying income that we're going to use on this application? You give us an answer, and not by any fault of your own. You give us an answer that is actually incorrect, and it's typically that you're estimating more that you make than what we're able to actually qualify you document-wise on your mortgage application, which gets us into a lot of trouble, because when, I can never stress this enough, a pre-approval, when you go to anyone else besides me, will only ask you how much money do you make, and they'll qualify you based on the number that you tell them. If you tell them a higher number than what we're actually able to document income-wise, then obviously that means you qualify for a less home, which means once you make an offer on a home, some hearts get crushed, because now you can't buy the home that you've made an offer on and that you fell in love with. It's important to know that when it comes to income, what you're making this year has absolutely no bearing on what you actually make according to the bank. Now, here's a few scenarios. The easiest scenario is if you are salaried. And when I say salary, I mean cutthroat salary. Like, you only make $60,000 a year and that's it. There is no overtime, there is no extra pay, no bonuses, nothing variable whatsoever in your pay. Because if you make bonuses, well, now you're not salary, are you? Because those bonuses are not guaranteed, but sometimes you make them, sometimes you don't. If you're salaried, the easy way to go is just do your straight up salary. But if you need those bonuses to help you qualify, well, then you need to have made those same bonuses at least 2 years in a row in the past, not including this year. So here's the go-to method for determining what your income is. And we'll just go for the employed people. Self-employed people, you're a whole other story, and you know it. So if you're salaried and you make only salary, great. We'll get a job letter. Your salary today is fine. That's the income that we'll go by. But if you were hourly, if you are commissioned, if you were hourly plus commission, salary plus bonuses, or anything with any kind of variance in it, where last year's taxes won't be the same as this year's and so forth, then this is where we get a little trickier. We need to take a 2-year average of your income based on whatever it says on your NOAs. And your NOAs are your notice of assessments. This is the income that you have been taxed on. So if you're a hairdresser, if you're a server or a bartender and you make tips, you don't declare them, you don't make them, not according to the banks, okay? So whatever it says on your last 2 years NOAs, we take an average of that, and that is your income. What you're making this year. Maybe you've got a lot of sales coming in commission-wise this year compared to last year. It doesn't matter. It's a last 2 years average. So I really need you to understand that, because there is no wavering on that. The other thing to note is if, say, this is actually really common for what happened because of the recession last year in 2009, if you made, say in 2008, because it's 2010 right now, so in 2008, if you made $50,000, and then because of recession, or you were laid off, or you didn't get as many hours as you thought, in 2009 you made $40,000, so you went down by 10 grand. The banks will only use the lower of those two. In an opposite situation though, if you made $40,000 and then went up to 50, they will use an average. The reason they do that is because if you're showing a decline, they're worried that that's a trend. And so what if you continue to decline this year? Well, then you won't be able to make your mortgage payments, and then you'll go into foreclosure. So as a safety buffer, the banks use on a declining average, they'll use the lowest. If you're inclining or the same, then they'll just use an average, okay? So that is how you qualify your income. If you are employed, if you're salary, your straight salary, that's the amount you make. But if you have any kind of variance in your income, it's a 2-year average. Unless it's on a decline from one year to the next, it's the lowest, okay? What you're doing this year makes no difference on your mortgage application, okay? In terms of self-employed, that's going to make a longer video. So I'm going to cut it off right there, and I'll do another one after. But I have done stuff on this before, so feel welcome to look up my self-employed or stated income program videos that I've done on here. If you look on the categories, it's going to have self-employed on there, and just check out those categories and that'll give you more info. But if you want to know what you make based on your income today, feel welcome to give me a call. I can tell you what your income is according to the bank and also what you would pre-approve for today. And because rates are so low, might not be a bad thing to lock in your rates and get pre-approved that way. So Lea Coss with the Mortgage Center, hopefully this has been helpful, and hopefully I will be talking to you soon.